All right, perfect segue. Let's jump into the most volatile event this week, FOMC. Don't put too much pressure on yourselves to trade this with perfection. I would even give yourself some grace with some more time on contracts if you are going to try to dive into the fire. But this is a big one in my opinion. We can all argue, fight tooth and nail over the fact of whether this has been priced in over the last month or so. I believe it personally has. But one thing that is for sure, right, is the probabilities here have never been this close going into an event one day away, right? Typically we see a 90-10, 95-5 probability of the banks and anyone that's predicting this knowing exactly what's going to happen, and it's usually on par with that. This is different where we do have the 100% certainty of an ease. So we can almost guarantee that's going to happen, which means cuts. But what we don't know, right, and this is the thing that's a little iffy, is it's either going to be a 65% chance of a 0.50 BPS cut or a 35% chance of a 0.25. We have never had it be this close, right? I mean, 65-35 does sound like, oh, it's for sure going to be this one, but it's never been this close, guys. It's usually a 90-10 or like a 95-5, and we're obviously coming into our first easing cycle since 2020. So this is a big, big thing. If they come in with a 0.50, who knows how the market will react? Obviously, it is the leading candidate for what is most likely going to happen. But if you guys saw, right, a lot of the banks are actually predicting a 0.25, and only JP Morgan came out and said that they're expecting a 0.50 cut. So just a lot of conflicting views here. We have to just see how this goes, guys. In my opinion, and what we've seen from a lot of the previous rate cut cycles is a rally right after the rate cut announcement, and then obviously a larger correction after that. We're coming into some unprecedented times, though, right? We've also seen going into an election year. We've seen before where, there's obviously an election coming up. I think it was 2008, and the market ended up having a big, big pullback leading into that election, right? And then post-election, obviously, we have flows that come in towards the beginning of the new year that lifted the market and gave it a nice bounce. But we've definitely seen different sides of the fence in terms of what should happen. It's important to just stay in the now and not get too biased with things. That's why I'm going to be primarily cash on hand, right? And this is where we'll kind of segue into the charts and kind of what I like. Don't get too caught into this and trying to trade and predict this or trade even off of the announcement, right? If it comes out with a 0.50 hike, don't just buy calls, just play it safe. There's plenty of opportunity. There's plenty of high targets that we're looking at for some of these charts. TSM, QQQ, Tesla, for example. A lot of these have a lot of room to run, so you're not going to be late to it, especially if you miss the first 5 or 4 points. It's not that big of a deal. I'd rather play it safe than sorry. But yeah, that was the probability factor there. Obviously, here is what we're looking at. Fund rate coming out at 2 o'clock. So remember, I would avoid taking anything 0DTE or anything short dated, especially on the indices, as there is a vol crush, right? And there is a vol event crush that does end up happening to those contracts leading into the event. And then once the event vol drops off, there's a new event vol that comes up with Fed Chair Powell speaking at 2:30, which is literally 30 minutes after that announcement. So if you're going to trade anything, I would usually just wait until Powell speaks. However you guys go about that, that's up to you. But yeah, 2 events kind of coming up here that are going to be real volatility drivers. And then Thursday, right, we have unemployment claims, nothing on Friday. So these are the 2 days, if anything, that I'm expecting to give general trend, and you can probably trade this safely going into Thursday, Friday, right? Now let's take a look at charts here. Let's just kind of jump into the cream of the crop. I'm not going to be looking at SoFi. First chart, let's actually start with this one. It's Tesla. You guys might have seen me post this in the general chat. Chart's a little messy right now. All that really matters to me, right, is this, right? So we have this uptrending formation that's kind of building out. Obviously, we have this low here, which is that August 5th low, broadly across the market, and we've kind of held this higher low trend line along the way. Now, what's happening is the tightening of the chart, right? We have higher lows being made. We have a clear flat top here at 234.27, and it gets really interesting because we technically have the gap here that's supporting price now, right around 225, right? We'll just round it down a little bit. Technically, it's 225.42, but we have now breached into the gap, but we're hitting the last area of resistance midway through this gap, right? And the gap is obviously this red zone. I'll just make it gray so everyone can see it a little bit better. So think about that, right? We breached into a gap. Now we've hit resistance of where sellers are trying to stop this gap from filling. And today we obviously printed kind of like a shooting star. As long as we can hold 225.42, I'm pretty bullish on this chart. Obviously, the uptrend is a bullish thing as well, and we are keeping an uptrend here with higher lows being made, but this is subjective, right? If this cracks, I don't really want to participate in the short side, and I really don't want to take calls off of a trend line, right? I like levels. I like knowing exactly where buyers slash sellers are going to be, and this is subjective, so I'm not going to look to take calls here. I'm not going to look to short things here. This is simply a long-sided trade for me. And it's very easy if we can break above 234.27, right, which is this obviously this gap level here, or the gap midway through the gap, the resistance in this spot. I'm just looking for a simple break and base, right? I'm not looking for anything super crazy, right? I'm not trying to get 0 DTs. I just think there's a very nice passive trade here where you can get a break and base and then a move simply to 246, right? Now, in terms of percentage it's going to move on the contracts, I don't know, but from the underlying perspective, that's about a 5% move or $12, simply from the break and base. Now, if you guys took this overnight, right, I know some of you guys went long on this, which is kind of risky, but it's, you know, it's your guys' account if you guys wanted to take this. That's a 20-point move, right, 9%. That's a much better trade there. But you may have to hold through some drawdown, right? If we gap down or something ends up happening tomorrow, you just got to be able to stomach that. I would rather just play it safe and just take, you know, it is for what it is. We're in a nice gap. We're in a liquidity void here within this 246 to 225 spot. We just have to crack this 234 level, right? So Tesla's my top watch. I like the 250 calls, right? Or you could even do 245 if you'd like, but I am looking at the 250C. Probably 2 weeks out. I'm looking for a break and base of 234.27, and I'm targeting 246 with those 250 calls, right? So that's number one for me. Not to mention, too, guys, I mean, just look at the consolidation here. We have this mother candle, or this bearish engulfing here from Friday. We've traded 1, 2, 3, 4, 5, 6, 7 days within this bearish engulfing candle. That's insane. There's going to be a big move. If it is the downside, I'm going to sit it out. I'd rather not trade the downside. If it's the upside, obviously I'm looking above 234. Next chart is NVIDIA. Pretty simple chart here. If for some reason Tesla is just not behaving well, or I don't like how it looks above that 234 level, tape's acting weird, or let's say Tesla's just underperforming the market and NVIDIA goes, right? I'm looking for a very simple trade here. Now, I don't really have any levels that I feel like are valid on this one. It's mainly being supported by these EMAs here, and you guys should know me, I don't like EMA trades, right? I feel like those are once again subjective, but it is kind of pulling back nicely with this 3-bar pullback on diverging volume into the EMAs after this breakout from kind of like this progression gap high, right? We did touch the bottom of the progression gap, we filled. Now we're touching the high, right, which was our higher low, and now we have an opportunity to catch the EMAs and start to push towards this area right here, right? Kind of a broad zone. But there is a nice hourly gap here, right around 125 to like 124, which I have highlighted in red. You guys will be able to see this a little bit better here on the hourly, right? Kind of this general range here, right? Obviously the gap is down here, but I just wanted to use just the void to kind of show you guys a little bit easier, right? It's easier to illustrate, in my opinion, when you can have like a physical zone that doesn't have any price in it. But yeah, that's kind of what I'm going to be targeting. Just need that downtrend break. I usually don't trade trendline breakouts, but this looks pretty good in my opinion. I do have, if you guys saw, I have a lotto on SOXL. If you guys were curious about that and wanted to tag it, kind of the same concept, right? Where we ended up having this lower high here. It sold off, caught a higher low just before that August 5th low. We pushed up, and now we're pulling back, and not only EMAs, but you guys can see here, right? We have this progression gap as well, right? Within this engulfing bar here as well. So this looks like a really clean spot. I think SOXL could catch a nasty bid, make its way up, obviously from this gap down here, kind of the same as NVIDIA, up to 38 down to like 36. So could be a good opportunity on those if you guys wanted to tag those with me. If not, totally cool. But yeah, SOXL looks pretty good. But yeah, NVIDIA, probably the only individual semiconductor name that I am interested in trading. And that's really it, guys. If the market does sell, I think I'm just going to start adding into Apple. Excuse me. And it's very simple. You guys should know that this progression gap, and I mean, I've been posting this for a long time. is here. We obviously have an inside bar, very, 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 it's very anemic in terms of volume and also the spread on these daily candles. And really, if it ends up breaking under 213.50, right, which is this gap low here, right, if we get some kind of move like this, I'm just going to look for a retest, and then obviously we're going to look for that continuation down to 198. But I have plenty of time on these. This is a November contract. I only have 4 contracts, but everybody should theoretically be green, right? I took this trade up here, right? So I took that trade around 225. Obviously, it went above my risk a little bit. I let it hit the gap to see if it made a new high. It never made a new high, and it's been pretty much what? Lower high after lower high. It's pretty much been doing the same thing here. It's kind of just been making these little small bear flags, whatever you guys want to call them, and then selling down, right? And then they've been using a lot of news for this to really drive and give catalyst for a gap down. So if an FOMC, something weird ends up happening here, right, there could be a big move on Apple. So I am keeping my eyes on this one, but like I said, a move under 213.50, which is this progression gap low, I'll be looking to add into this, and then my risk would kind of change, right? What would my risk be? Probably look for ads once again into this zone here. And I would make bulls pretty much make a new high against me, against these daily highs up here, whatever this is, right? So if we want to put a level to this, just so we can have one, it'd probably be 225.50, and I would be looking to add up until the close here, right? So like 226, or yeah, 222.66. I'm sorry. That's where I'd be looking to add into my position. My risk could be here, right? So if we end up getting a move back up, this is kind of what it would look like, right? I'd be willing to take this all the way down, right? So I have a plan for both short and long, but just need to be patient with this one. Obviously, a pop on this one would be nice. That's just really weak. I could add into this, or if it breaks down, right? I think I might be willing to add into this here. Obviously, this is a larger risk, but it's still a 2R, right? So let's say this ends up gapping down. This is the example I'm trying to give. Let's say it gaps down and it retests 213.50, and I add here. Right, I take the trade off of 213.50 and it starts to make its way up. I can still add into this trade. I'm not going to freak out. Obviously, the R is still above a 2, which is what I want. So this is kind of how it would look both ways. So just wanted to go over that really quickly. Tesla, Nvidia are probably the two I'm going to be trading with a more aggressive approach if we do have the market behave well tomorrow. If the market doesn't, right, I think I'm just going to use this Apple trade and obviously start to size into the November contracts that I currently have. Probably pull those to around like 10 to 15 cons from the 4 cons I'm currently in. So that's really all I'm watching tomorrow, guys. Nothing super crazy. QQQ, if you guys wanted an update on this one, I really don't know, right? I don't know. We're about to break this downtrend here on the daily, as you guys can see. I'll just make it white really quickly. Couldn't be in a more unpredictable spot. If it does reject, like I said, I would like to see this sell down. If it could sell down one more time to the top of this progression gap, I'd be willing to long that. And then obviously we're looking for that move end of year to like 497. So we'll just have to see what tomorrow brings. TSM, kind of the same thing. Right, these are all my swings. I'm just kind of seeing how this reacts. Ideally, we get the move down to 165 or hold above 168. And it's kind of the same thing, right? Kind of just add in this general range. I wouldn't risk 165 exactly. I'd kind of go a little bit lower. And then same thing, right? Kind of targeting up here. Still a really good trade here with about $18 to $20 of potential profit. And then what else? MU is probably the only other swing that I'm really interested in right now. This is still very criteria driven. I'd like to see this sell down from this current range. I think earnings is going to be the one that does it, but if it can sell down into this spot, probably going to grab some leaps on this and just look for this to reach 127 to 130, right, somewhere up here. But yeah, those are probably the main two, TSM, QQQ, and then we'll see how MU behaves after earnings. So hopefully you guys enjoyed. We finally are kind of getting this out of the way. FOMC, this was the big thing that I really didn't know what would happen, right? A lot of these charts are set up, but they could technically still be lower highs that fail, right, and then sell off. And if they do sell off, there's still an opportunity to catch these on a higher low sweep, right, as we saw with QQQ. Like this could theoretically sweep underneath this spot here, right, with like a weekly bar or the strong or some kind of daily wick underneath, and it reclaims. So it's just, you know, I don't want to be buying the breakouts. That's all I'm trying to say, right? I just want to play it safe, especially with this little window that we're coming into between now And obviously expirations tomorrow, FOMCs tomorrow, Fridays, OPEX, and I try not to get too into these days and too scared of them, because when you get scared of these days, you miss a lot of great trades. If the chart's speaking to you, it's speaking to you, but yeah, just want to keep my eyes out, play it safe. And obviously, like I said, don't feel like you missed the move. If this ends up launching, I still have a QQQ position. Um, some of these other names, TSM, I still have a position in. And there's plenty of opportunities to add on these as well. So just don't feel like you missed anything if the market starts to do anything crazy. Remember to tame your emotions. That's the biggest part of this. This is always going to happen, right? You're always going to have opportunity. Don't feel like you need to put your entire portfolio or do anything crazy and chase just because it's a spur of the moment. Just be smart. And that's really all I have for you guys tonight. So I will see you guys around noon tomorrow. I will not be trading in the morning, but I will see you guys about an hour before the data release, which once again is a friendly reminder, right? Data release is at 2. Okay? So I will see you guys then.